Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Uber is a stock that's on my radar again. This is a company that's lost billions and billions of dollars growing to the scale that we see today. And it hasn't been clear that the company has either a competitive advantage or the ability to make money long term. But I think that's starting to turn around. And I want to give 3 reasons why I'm bullish on the stock and 1 reason to be a little bit hesitant. My name is Travis William. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you're in the DC area, check out the Money Collaborative event that I'm throwing on August 18th. Details in the show notes, but that's going to be a lot of fun to talk stocks for a few hours with people. I want to start with the revenue trends for Uber because I think this shows a lot of what's going on with the company. You can see the revenue trajectory of Uber versus Lyft. I think this is the best comparison because both of these companies should be riding similar macro trends. But you can see that Uber has grown 211% over the last 3 years, while Lyft has only grown 50%. This is the network effects of Uber's network starting to kick in. The more drivers you have, the more riders or food delivery you're going to attract, which is going to attract more drivers. And it's a flywheel that once it gets going, it's hard to stop. On the flip side, if you start to lose drivers like Lyft seems to be doing, you start to see your business go into a state of decline. So this turns out to be what I think is a winner-take-all market where the winner takes a vast majority of the potential profits from an industry. And I think it's pretty clear right now that Uber is the winner. So this revenue growth is a great reason to be bullish on the company. I mentioned net income earlier, and you can see here that net income has actually been pretty poor for Uber. But let's go to the next chart here and show the quarterly net income numbers. You can see that this has been improving at a really rapid rate. This is partially because Uber has been growing revenue, and it's partially because it's been increasing the take rate or the percentage of each dollar that customers are spending that Uber takes as revenue as opposed to sharing with drivers or its partners. The company is now operating cash flow positive, and in a few quarters, it could actually be operating income positive as well. So definitely a trend that is heading in the right direction. Uber, despite everything, also has a pretty good balance sheet. $4.2 billion worth of cash. There is $9.3 billion worth of debt. Given the fact that the company is now operating cash flow positive, if these operating trends continue, we should see that balance sheet getting even better. So while balance sheets start to come into focus for companies like Lyft and actually may make them a little bit weaker, for Uber, I see this as really a point of strength. It has reached the scale where it's going to be able to use that balance sheet to its advantage. But this is where I want to highlight the risk that Uber faces. This is a recent announcement that Uber made saying that it was going to partner with Waymo to bring autonomous vehicles to the Phoenix area. Now, we know that Uber had its own autonomous division trying to develop that technology a few years ago, ran into its own problems, and actually had to shut that down. That means there are only a handful of companies that are really leading the autonomous space. Waymo is one of them. Makes sense for Uber to partner with them. But the other one to think about is General Motors subsidiary Cruise. I would say Waymo is putting far more miles on the road, but Cruise has a much clearer business model and actually has its own custom vehicle starting to roll off production lines right about now. So a little bit different, makes sense for Waymo to be partnering with another company that can bring the network effect, and that would be Uber. The question is, and the threat I think for Uber is, how do you integrate autonomous driving into your Uber network without making your existing drivers mad, without underpricing them, without overcharging for autonomous rides? Cruise is coming in basically with a blank slate. Could they potentially cut their prices to a point where Uber with drivers can't compete? And now they're trying to leverage Waymo's technology, but can't necessarily do that in an effective way. So I think competitively, Uber's in a much better position than it's been in quite a long time. Doesn't necessarily mean that they've clearly turned the corner to profitability, but I think that is on the horizon. The big threat and the thing to watch is autonomous driving. Can Uber get that strategy right by partnering with Waymo, maybe eventually even buying Waymo? The answer to that is unclear at this point, but I think Uber in a much better position than it was just a few years ago. What do you think about Uber stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.